You wanted the best. You've got the best podcast, the hottest podcast in the world. The Chris Voss Show, the preeminent podcast with guests so smart you may experience serious brain bleed. The CEOs, authors, thought leaders, visionaries, and motivators. Get ready. Strap yourself in. Keep your hands, arms, and legs inside the vehicle at all times, because you're about to go on a monster education roller coaster with your brain. Now, here's your host, Chris Voss.
Hi, folks. Chris Voss here from the ChrisVossShow.com, the ChrisVossShow.com. Welcome to the big show, my family and friends. As always, bringing you 2 to 3 shows a day, 10 to 15 shows a week. What more do you want from us, people? Jesus Christ, there's so many brilliant minds and people on the show. It just expanding your mind to a level that is unbeknownst to humankind in any way, shape, or form. We're literally changing the brain size of humanity, and that's what the geologists are telling us when they're digging up the old skulls that had listened to the show from the last 15 years. They're finding that their brain size increased. That, or it could be the brain damage in the blood, the brain bleeding, or whatever it is. One of those two. We think they're smarter because of it, and there's no way to know unless you try it first. Remember, there's a 30-day trial on all the Chris Voss Show episodes, and with the money-back guarantee, if you're not smarter at the end of 30 days, we'll go back and listen to all the shows. Damn it, what the hell were you thinking in the first place? Chris Voss Show, the family that loves you. Make sure that you support the family. Go to goodreads.com/Chris Voss, LinkedIn.com/Chris Voss, YouTube.com/Chris Voss, on TikTok, TikTok1, Chris Voss 1, I should say, TikTok, and follow us and support the show over there. Refer it to your family, friends, and relatives. Give us a 5-star review over there as well. We have an amazing gentleman on the show, and he's going to be talking to us about real estate, investing, and some of the incredible things he's done to build his business. So you're going to learn a lot about stuff like being an entrepreneur, building companies, et cetera, et cetera. We have Venkat Avasarala on the show today. Did I get that right, Venkat?
Yeah, Venkat Avasarala.
There you go. And he is joining us on the show. He's the founding and managing principal at Stryker Properties, LLC. And he is a seasoned real estate professional. His main focus is ground-up development of market-rate multifamily properties and acquiring value-added workforce housing multifamily properties in landlord-friendly Sun Belt states. He's developing 2,700 multifamily units in DFW, Austin, and Phoenix. He also has acquired 3,600 existing apartment units since 2016. He's managing $150 million in investor equity and has over $900 million in assets under management. Welcome to the show, sir. How are you?
Doing well. Thanks for having me, Chris.
There you go. That's quite an impressive executive summary you have there. How long have you been doing this?
Since 2016.
There you go. Since 2016. I wasn't sure if that was just the acquired. So this is going to be an awesome discussion to find out how you built these amazing companies, some of your thoughts on what the real estate market is doing. Give us your .com so people can find you on the interwebs, please.
StrykerProperties.com.
There you go.
STRYKER Properties.com.
There you go. And so give us a 30,000 overview of Stryker Properties in your words, and kind of some of your thoughts on it, what you want people to know in a big synopsis.
Yeah, in a nutshell, what we do is lately what we've been up to is we're building Class A multifamily apartments. Class A meaning affluent areas, luxury product, because as you know, the home affordability is going down every single day. An entry-level home is like $500,000 in any major metro. And a lot of people don't have the 20% to put down, let alone afford the mortgage payment for 30 years with mortgage rates at 7.5% right now, right? Mm-hmm. And young people are wanting to rent now because the demographics have vastly changed over the last 10, 15, 20 years. Mm-hmm. We have the baby boomers coming who are downsizing, don't want those houses. They want to live in apartments. But the young people, they're getting married late. And also a lot of people are staying single, even with kids. And then some people are choosing not to have kids, right? So no longer you absolutely need to have that big house like we thought, right? And also affordability is another thing. And also gig economy is up. Nobody, the young people especially, is not very keen on doing 9 to 5. They want to live here in this metro for a couple of years there. So for all these people, renting Class A apartments with highly amenitized apartments is the way to go, and we are filling that need. And I'm doing my part in DFW, Austin, and Phoenix.
There you go. And it's interesting. I guess the model's really changed, maybe with remote working as well, and people wanting to be more mobile. I guess some of those, a lot of people complain about how they can't afford houses, but it sounds like a lot of the metrics and statistics around what people want to do is vastly changed from the old world.
Absolutely, no doubt about it, right? And also, right, if you see the construction costs, especially after COVID, everything is just worth like 30, 40, 50% more than what used to be. And people are not making 30, 40, 50% more than what they made before pandemic. This is norm in the rest of the world. US was the only place where we had affordable housing, but no longer that's the case. So we are kind of becoming like every other country, every other developed OECD country out there. So nothing out of the ordinary. We are just reverting to the mean, so to speak. But yes, I mean, the struggle is real, especially after 2008. A lot of developers, single family developers, they went bankrupt. They didn't get any help whatsoever. Not the kind of help, not even like 10% of the kind of help that the federal government extended post-pandemic, nothing. So people were slow to get back into the business and building homes, right? So there is that scarcity as well. And then there is NIMBYism, right? I mean, a lot of cities don't want all that development. So all this coupled, the net result is unaffordable housing, and people's incomes are not keeping up with the raising costs of the ownership. And also you take the property taxes, insurance, energy, everything is just so expensive nowadays. So
that's true.
Renting is the new American dream, and just living your life on your terms.
This is ironic because I don't know if irony is the great word, but years ago in 2008, when I owned a mortgage company for 20 years before that, until 2008. We all know what happened then. People would always, the rule in the business was people always default on their credit cards, but they would never default usually on their home payment because you got a place to sleep at night.
Absolutely.
And that was kind of like the rule of the business for, 20 years and probably before I got in the business. People, there would be special mortgages that we would have for people who always made their mortgage payment on time and never defaulted on that. But they would let everything else go. And there would still, it's like if you held on to that one main thing, the mortgage payment, you'd at least have a shot at something. And when with the banks I started consulting with after business started going down, I remember walking into a place in Santa Monica, a bank in Santa Monica, and I was in their back office, and we were talking, and they go, yeah, we just got another bag of jingle mail. And I'm like, what's jingle mail? What the hell's jingle mail? And they go, well, there's so many people, taking their keys and throwing them in the mail, just saying, hell with this. Here's my keys. Take my home. I don't care. My investment home, my second, third properties. That when the postal service guy shows up, the mailbag jingles. And they call it jingle mail. And I'm like, are you kidding me? And they showed me, and I was like, this is extraordinary. And then we started seeing the stats that people were keeping their credit cards and their stupid Land Rovers and crap that they overpaid for, and giving up their homes. And I'm like, this is extraordinary, because this is a shift in how we look at housing and investments, and I don't know, an any new generation. I don't know what's going on. But basically I predicted at the time, I think, we've gone to renter everything, are we going to go to renter homes? And this is the new future where no one's going to really own anything anymore. And of course,
that's pretty much it.
Then came rentable music, Spotify and all those other things. And, no one owns music. And then, I'm just like, holy crap, this seems to be where we're going. And what do you know? Here we are. So give us an idea. What got you into this business? What got you into real estate? What's your hero's journey, your upbringing, and what motivated you to start your own company?
Yeah, so I'm originally from India, South India. And back home, I did my bachelor's in electronics and communication engineering. I came to US in 2002 as a student to pursue my master's in electrical engineering. Once I completed it in 2004, we were just getting out of recession at the time. And then suddenly I find myself in a situation where I came here, but all the jobs went to Asia, right? Entry-level jobs that do, right? And at chips, electrical engineering, VLSI is a hot topic right now, but not so much back then. So I ended up pivoting to IT because IT was doing really good, pays really well. So I didn't look back. I did my 14-year stint with IT, worked for several Fortune 500 companies.
There you go.
2008, when I was in Dallas one day, October 2008, I precisely remember, as the onset of the Great Recession, right? So I was going to my work and like every day, 9 a.m. in the morning. And then as I walk through towards the building, I see that there's fire engine there, there's ambulances. And then I started hearing screams and I said, okay, something bad's going to happen. And I went closer and then I saw people on the floor crying, moaning and all that, right? So something really bad. Okay, what happened there was they were mass firing 300 people, laying off 300 people. And these are all older people, like 50s, 60s, and they were working on some outdated technologies that particular company was using. And the reason why they are like in distress is like, who would hire them now? That's all they know. Nobody uses that software anymore, right? So that whole batch was being outsourced and replaced by young chaps who would work on a fraction of what they were paying to them, right? I'm not here to criticize the policies and practices of a company. Everybody do what they have to do to survive, right? And to increase their shareholder value. But that dawned upon me that, look, we cannot be complacent on our jobs. You know, it can be there today, it can be gone tomorrow. And I promised myself that, you know, I will not let this happen to me. And then started my quest. I was very focused, obviously, right? More on my job and everything. But at the same time, I used my nights and weekends not to watch TV anymore, but rather I was looking for, okay, how else I can generate some income where if I were to lose my job, I won't be on the floor crying. Right. So then I found real estate and then I started out small by doing some single family homes. And then I acquired about 20 of those in DFW, and I was managing them myself. By 2015, I found myself in a position where I'm bringing in more income with my rental homes, cash flow from my rental homes, than what I'm bringing from my day job. So I felt really comfortable, and that, look, even if me and my wife were to lose our jobs, the mortgage will get paid, the Netflix will get paid. I mean, we can eat, so that's good. Right. Then I just want to see what else I can do from here. And then started buying apartments, existing apartments, workforce apartments. So these are built in 60s, 70s, 80s, neglected and all that. Right. So we went there. In other words, basically, I was flipping apartment complexes. We don't use the word flipping because it's not done 3 to 6 months, but rather 2 to 3 years. To fully renovate, upgrade the apartments, increase the rents, increase the income, and sell it for a profit and hold it for cash flow, either or, right? So that is what I was doing. And then that is when I started syndicating. Then I started bringing in my network as my investors, where I'm the general partner, where I find these apartments, raise money, arrange the debt, do all the work. But the passive investors, they just invest their money and get their cash flow and their appreciation. Because now I'm in kind of a big boys league. Each property, my very first property was $3.5 million. I needed a $1.2 million down payment, which I wasn't liquid like that at the time. So I raised money and then I did a second one and third one, ended up eventually buying about 3,600 units. And that business was fine until COVID. But after COVID, what I quickly realized is that the workforce, that is the folks who makes, let's say, $40,000 to $75,000 of household income. They were doing fine until 2019, but after that, I mean, they got disproportionately hit. These folks usually don't have bank balances, right? I mean, they don't have emergency funds and all that. And suddenly when the whole world shuts down on them, they immediately got into distress. So I saw the writing on the wall, but then government stepped in and helped everybody tremendously. So I called the peak on this thing and sold pretty much almost everything, 95% of everything at the peak of the market by 2021, before the interest rates went out. I did not predict the interest rates will go up, but what I saw was who's hurting and who's doing well.
Uh-huh.
Income inequality just widened like crazy
Yeah.
after federal government printed all those dollars and just left it on people. All that money started ending up in the top 2 quintiles of the population, while the bottom quintiles, even though they had a surge in savings for a little while, but then again, they're worse off right now. So when I saw that, I saw the writing on the wall and exited that workforce housing and chose to, okay, now I'm going to cater to the top 2 quintiles of the population by building Class A apartments. Why? Because houses are just so expensive. Now it costs like 30, 40, 50% more to own than to rent. Never before in the history of the time in United States where the gap was so different. So for me, that was a slam dunk, coupled with the demographics, changing demographics and what they really want. So
there you
that's
go.
my transition. And now I'm building about 2,500 units, 1,700 units actively, and the rest of them in pipeline.
There you go. And it shows here on your company profile on their website, I don't know if this is fully current, but $611 million in assets under management.
That is correct. That is after selling our properties,
Wow.
the 3,600 units. So yeah, transactions of 900 million and about 600 after selling the 3,600 units. We still have $611 million under management.
Wow, man. And that's awesome. So what do you do for people on your website? Do you help investors? Do you help people learn how to invest in real estate? Let's talk about
again,
that.
my background is IT. So I would say about 60, 65, 2/3 of my investors are IT professionals who can relate well with me. And Chris, here's what happens with IT people. They get paid really well, right? I mean, anywhere between, I would say, even a junior person gets paid $100,000, which is well above US household income, right? All the way into 300s, 400s, 500s. So these people are really good at what they do, but it's very taxing, right? Once you spend that 8 hours in an IT job, your brain is fried for the day, right? You last thing you want to do is to think about investments and all those things, right? So we kind of we're good at our jobs, but we kind of neglect our personal finances. And I was one of them, right? Because every time when it's time to allocate funds in your 401k, I used to go to 401k and just sort out all the funds available, and I used to pick up the top 4 funds which performed well last year. I don't even care which that is, right? I sorted them out, check, 25% each. Oh, I'm diversified, hit enter, I'm done. That's the way I used to invest, because I don't want to spend any of my mental capacity on this personal finance, because I had enough at the work, right? Mentally taxing work. And that is not the way to build wealth, right? That is definitely not the way to build wealth. And that is the message I give to my investors, and that it resonates with them because they feel that, yep, I'm guilty of that too. So I got to do better, right? So that's why, and then, Andrew Carnegie back into 1920s itself said that 90% of the millionaires in this country are made out of real estate, right? Because you cannot mess with it, right? It's not a stock that you can buy this morning and sell this evening and all that. Once you make an investment, you're pretty much tied up, and you don't get to mess with it. You let it grow. And every year it's costs more to build something, right? I mean, it's the inflation, the labor, the material, and everything. So the fact that you cannot mess with it on a daily basis or a weekly basis or a monthly basis, let it grow and makes you a millionaire slowly. It's not like a Bitcoin where you can be a millionaire next week, or a pauper the day after, right? So it's tried and tested. Real estate is the way to go. And I have my niche. I don't want to do anything and everything in real estate. My niche is Class A apartments.
Definitely. It doesn't have that volatility. It seems like, in things you can do that are high risk, there's more volatility. And you're right. What, like Warren Buffett says, invest for the long term. Play it out long ways. We've had one of the billionaire investors who runs one of the big hedge funds on the thing, and he's like, just buy it and hold it. If you try and game the market sometimes and try and catch different little sort of things that go viral, then you're probably going to end up screwing it up. And so this brings up a lot of good things. So on the website, you've got several different things I'm looking at on how investors or potential investors can look at to working with you. You've got join, learn, invest, and enjoy in what you call the Investors Club. Give us a deep dive on that, if you would.
Yeah, like I was saying, right? So most of my investors, I would say 2/3 are IT professionals, and the rest of them are usually physicians, doctors, which are more or less in the same boat, and then very busy business owners who doesn't have anything else, time for anything else other than running their day-to-day business, right? So these are the three kinds of investors, and I have some retirees too, who invest with me. What I try to do is to articulate as clearly as possible on why we are doing this and what we are doing this. And one example I often give them is like, let's say you teleport back into, let's say, early March 2020. Somebody bought stock, somebody invested with me in, let's say, an apartment complex, right? And then the pandemic rolled in. The person who bought in the stock, the fear took over and he sold his stock because market dived like 30% or something like that, right? So the person, the fear comes in on an average investor, and they sold their stock only to see that stock skyrocket in like next couple of months, right? Well, too late, right? You sold your stock for loss. But the guy who invested in real estate, he can't do that, right? So basically he has to swallow his fear. And then we came up super top on that. So that is what I'm talking about, right? An average investor is consumed by fear and greed. And if they turn on the TV and if they see that, oh, you know what, everything is going up, okay, let's buy at the top, right? The fear, same thing, right? So you can't do that in real estate. You'll not be able to do that in real estate. And that is how I grow investors' equity, right?
Yep.
And what I also share with them is how when we build something, we are adding value to the dirt, right? I mean, when we got there, it's just dirt, right? And then we build a structure and we create homes. And then that is how we make our margin. We don't buy something and just hope and pray like it gets, it'll appreciate and all that. Appreciation is always welcome. But my kind of investing, right, when we build these apartments or even take a patch of land and do and take it through the city, get it entitled and sell it in parcels, this is all work. We actually work and put our elbow grease into it, so to speak, to create the value for our shareholders there. So this is the learning part that I want my investors to know. And then I go about, okay, not all states are created equal, not all markets are created equal, right? So that's what that is when I hone in on, okay, how to pick the markets where you want to invest. How do you pick the sub markets and why? Basically, I chase affluent tenants, as simple as that. And the reason is these folks are not rent burdened. So if you pay more than 30% of your gross income in housing, then you're considered rent burdened or mortgage burdened, right? So we look for the people who are at 22%. Why? Because they have so much more to spend before they get rent burden, right?
Yeah.
My expenses go up, my taxes go up, or insurance. That's fine. I'll be able to pass it on to the tenant and they won't mind paying that, right? But as opposed, I mean, if I go after this workforce tenant who's already rent burden, forget about 30%, they're already paying 40, 50% on the rent. And even if I send $50 increase in the rent, they're just already stressed. Now they'll just move away, just leave you, or even worse, they might stay there for 2-3 months and not pay the rent and leave. And this is happening, right? This is happening. And I saw the writing on the wall back in 2001 and exited at the right time. So this is the learning that I give to my investors. So there's webinars that I conduct for them. And then one-on-one, they set up time with me so that not everybody knows all this, right? I mean, they're busy at their job, but it's my job to understand the macroeconomics, microeconomics, especially my neighborhoods and what's happening here, and then share that education with them and hopefully make them a better investor.
There you go. What are the best sort of prospects of people who want to invest with you? What does their profile look like, and how are they fit if they're out there listening to the audience?
These folks are majority of my investors are, let's say, between 30 and 65. And there are some outliers, but usually that's the people. And these are people who have jobs and they have some capital formation already, and they've been messing with stocks and not to have much success. And they're basically tired of this roller coaster, right? I mean, up, down, and it's like, I mean, how long can you take it, right? I mean, we are humans and we have emotions and everything. And people who are just tired and want to focus on better things in life and want to invest passively and don't have to worry about it. And they understand that it's not a Tesla stock to double like in a week or a month, right? I mean, they understand that, but they will get there slowly. That is the profile of the people. Not young people are like still into Bitcoins, cryptos, and all those things. I don't get a lot of young investors like in their early 20s and all that. But usually once people become mature, about 30 to 65, that is the profile. And they're everywhere. And my investors are pretty much in every state, but mostly concentrated in Texas because most of these projects are Texas. And we get quite many investors from California, Chicago, Jersey, New York. And one other thing, Chris, is people who own real estate in some of these states, like they can't even evict a tenant. You know, you need to do business where the state don't see you as an enemy, right? I mean, thankfully, I operate in markets where the state recognizes that, you know, how valuable we are, who provides housing to all our citizens, right? So we'll be able to evict our tenants and also friendly. I mean, that's all we are talking about. I mean, they don't have to do anything for us. It's like, look, if they don't pay, we should be able to evict them. It shouldn't take 6 to 12 months to evict. It should take about 30 days to evict, right? And that is the areas where I operate. And many people can say that. Like my California investors said that, look, I just sold all my homes. I can't deal with no more. What opportunities do you have, right? So that I can put in there and I don't have to worry about it.
There are definitely places that are more friendly to, tenants that don't pay their rent or landlords that are trying to foreclose or do stuff. And and it looks like you have a lot of properties in Texas. Texas seems to be a good growing place for everything these days.
Absolutely. Yeah. Especially not Dallas, right? I mean, so there are a couple of counties here in Dallas. DFW, Dallas-Fort Worth Metro has 7.8 million population. And we get about 300 new people coming into our metro on a daily basis.
Wow.
But it's about a 10 county area if you even count the peripherals. But 50% of all this inbound migration is coming in only into 2 counties, Collin County and Denton County. That's it. 50%, and the remaining 8 counties split the other 50%. And guess where I'm focused? Those 2 counties, Collin County and Denton County.
There you go.
These are affluent counties. This is where, let's say, for example, Toyota, after 150 years, I mean, they moved from California to Texas. Where they came into Collin County, right? And then so did JP Morgan Chase, Liberty Mutual, and even PGA. After so many years in Florida, they came to Frisco, which is in Collin County, right? So this is where I want to focus, where you have high income jobs, white collar jobs, but still the real estate is just so expensive. Like, for example, Frisco, right? An apartment complex I can buy for $250,000 a door, but a median home will be like about $650,000, $700,000. Right?
Wow.
And go upwards from there, right? So you see the difference, right? $250,000 for apartment complex versus like $600,000-$700,000 to buy a home. How many people can afford that $600,000-$700,000 entry level home? If you want a nice home with 3,000 square feet, all that, we're talking a totally different number, like north of $1 million, right? So that is where I want to provide housing via Class A apartments to those who really want to live in that place, gives access to their kids to all those nice schools, amenities these rich cities provide, but they just simply cannot afford to buy there. And they can come and rent with me, and now they have all this available to them. So that is
there you go. And I'd seen that Dallas is 7th on the list of places, the top 10 destinations for people that are moving to in 2022. Houston was second, in number 1 spot for the second year in a row in Houston, and then San Antonio number 9, and Austin 10. So basically 4 of the top 10 cities people are moving to are in Texas. So it kind of tells you where things are going. I remember when Las Vegas used to be the big thing most people was moving to. But now it seems like people like that Texas. Plus, I think I don't know if your summers are as bad as Vegas, but I think they're
It's not as bad as Vegas. Like this is once in a while we get about 40 days, 100-degree days, but Vegas is like it's totally different, right? It's like you get grilled over there, right?
Yeah, we do for about 3 months of the year. We fry.
There you go. But yeah, the draw for Dallas is first of all the geography, right? I mean, especially like I was talking, IT people who travel for their work. Guess what? If you live in Dallas, it's 2.5 hours in any which direction, right? So all the people, affluent people who travel for their work, Dallas is the place to be. And then what happens is we don't have state income tax, which can be pretty big.
That is
right?
awesome.
So that is good. And if you stay in an apartment, forget about it. You don't even have property taxes. We do have higher property taxes, but then again, if you live in an apartment complex, heck, there's no property tax. Well, you just pay your rent, and that rent is in line with any other metro. It's not like rents in Texas are higher because there is no income tax. Nothing like that. So if you're a renter, you can have your cake and eat it too.
There you go.
So that is the draw here. And also the business is fiercely business friendly, right? Fiercely business friendly. And every day, every week, we see somebody is coming here and we have plenty of land. The day we run out of land is when the growth will stop. And that won't happen anytime soon.
That's not going to happen anytime soon. There's a lot of empty land in Texas.
Absolutely.
It's a huge state. So this is pretty good. Well, we have a new segment we're doing on the show, and we're calling it, I don't think we have a name for it, do we? But basically, we're going to ask our guests 5 questions, and usually you find this coming at the end of the show, folks. So you always want to watch to the end, but we may surprise you and put it close to the middle like I'm doing today. And it's helped us get to know our guests better, but to also, have some fun here. So we've got 5 questions we're going to ask you, and just give us whatever your thoughts are. But there is a bit of a penalty phase here. So if you answer any of the 5 incorrectly, you're likely to be thrown in what we call the Chris Voss Show Podcast gulag, where you have to eat the gulag goulash from the Chris Voss Show. I don't know what that means. Our guest in the prior show came up with that. So we like the gulag goulash, and you will not be returning home to your family and wife. Now, we've had some people that have thrown the guest questions so they don't have to go home to their family, and we do not allow that either as well. So try and answer the questions as best you can as well. So if you're ready, here we go. The first question, is it better to be smart or lucky? You can only choose one.
I would say smart.
Okay, so we're going smart. That's your final answer?
That's right.
All right, there you go. Is cereal a soup or a salad?
It's more of a soup.
Is it?
Yeah, because it's liquid and all that. Yeah.
All right, that's your final answer?
Yes, sir.
All right, we'll put that one down in the docket there. And should socks be worn inside out for good luck?
No, I don't do that. So I would say that I'm stickler. I'm a little OCD on things. So I want to wear it proper way.
There we go. We have a definitive authority on that then. Is it acceptable to eat pizza with a fork and knife?
Absolutely not.
Absolutely
maybe
not.
Chicago deep dish. I don't know if you can call it a pizza, but yeah, I mean, the regular New York pizza has to be enjoyed with hand.
That's true. I think we accept that answer, judges. It's kind of a pie, that Chicago deep dish. But other than that, you need to use your hands. And is it appropriate to wear a Halloween costume every day? Like some people accuse me of looking like a clown or somebody scary every day. At least the kids, they point at me at the store and go, "Look at that, mommy."
Hey, look, life is short, man. Whatever makes you happy.
Whatever makes you happy. So, judges, final tally. There you go. You win. Right. Venkat, I apologize. You're going to have to return to your family. You do not get any of the gulag goulash of the Chris Voss Show podcast. So there you go. So thanks for participating in that. And my audience for watch for future shows. We'll use it as a bit. And give us your final thoughts, your final pitch on people you want to have work with you. Go to your website, join your investor club, invest with you. And any final thoughts from you, sir?
Yeah. Hey, look. Everybody has to pay attention to what's going on in the world. A lot's happening in very short time, and especially in the last 3 years, right? So we got independence in 1776. It took 250 plus years to build up to $7 trillion in M2 money supply. That's all the money, right? At the onset of Great Recession. Fast forward 15 years, short 15 years, and our money supply tripled from 7 to 21. And all that money is flushing into anything and everything, right? The homes become expensive. They're buying up all the private businesses. They're buying up all the hospitals and all that. Look, we can sit here and complain about all that or join it, right? Or join it. What I chose to do, if we are on the sidelines, guess what's happening, right? The money that we have in our hand is losing its value by the second until it's worth nothing. So we have to jump and grab those dollars that Fed is printing and throwing into the world, so to speak, just to be graphic, right? And whoever does that better with discipline will win in this thing, because otherwise everything that you care and need in this life is getting expensive. Your kids' education, a home, a medical services, everything is just expensive. So my message to all the wonderful people out there is pay attention, invest, and just educate yourself and invest. And it's not over. It's going to get a lot worse right now, because we are paying $1 trillion. The federal government this year will bring in $5 trillion in tax revenue. $1 trillion is going to interest payments. $800 billion is going to defense. So it's now more than defense. Guess what they're going to do? They're going to print more dollars. It's just a matter of time, right? So position yourself. Otherwise, you'll be left out. That is all my message. And the choice I took is to build Class A apartments and be of use to the community and get rich in the process along with my investors.
There you go.
That's all I got to say.
There you go. Give us your .com so people can find you on the interwebs, please.
Yeah, Stryker, Stryker, properties.com.
There you go. Thank you very much, sir, for coming on the show. We really appreciate it. Very insightful, and we'll look forward to your success. Future success. I mean, you're already being successful. There you go. More of it.
Thank you.
And thank you. And thanks to my audience for tuning in. As always, refer the show to your family, friends, and relatives. We just started a new 5-question bit that's funny as hell. If that doesn't get you to refer the show to your family, your friends, what more do you want from me, people? Jesus. Go to goodreads.com/Chris Voss, LinkedIn.com/Chris Voss, YouTube.com/Chris Voss, and Chris Voss 1 at TikTok. Thanks for tuning in. Be good to each other and invest in your future. We'll see you guys next time. And that should have us out.